Today is also a special day because we are discussing PMS Bazaar, PMS Corner today on the show with a very rare voice. Usually you wouldn't find Parag Thakkar, who's the guest on my show today, coming on business channels or talking to media, and that's because he manages ICICI Prudential's PMS, and he's going to discuss. He's one of the people who actually called out the small cap, mid cap peak and stopped taking lump sum and fresh investments in their small cap oriented PMS scheme, and now they have actually changed their tone, calling that area relatively attractive and have opened it. Today we are going to discuss with him two strategies which he manages, the Contra fund and also the pipe scheme, and we are going to talk his strategy and stock picking skills. Parag, thank you very much for joining in.
Thanks.
Great to have you on ET Now after a very long time.
Thanks.
Parag, let's start by understanding first your big call, which was very often discussed in the market when you called out the peak for small cap, mid caps. What were those signs which you said that this is time to start coming out perhaps, or stopping investments, and now you've changed your stance back towards leaning towards it?
Yeah. So basically we look at P multiple of the small cap index. So small cap index in January 18 was at 25 times, and it was at a premium to large cap and mid cap both. And if you see from August 2007 to January 18, all small caps were rallying like a mad. So there was a crazy run and it was complete euphoria, and many stories were getting sold. So that was, I would call it a perfect top. And of course I give this credit to my entire team, my colleagues and other fund managers also, because it was a collective call which we took to return 700 crores to investors. And after that we saw 42% correction in small cap index. So PE multiple, which was 25 times, came to 14 times recently in August, September. So then we said that okay, now this is a hatred space of the market, so let us focus there. There are so many good quality companies which have corrected 30, 40, 50%, while profit decline was hardly 10, 15%. And business cycles were going wrong. The corporate governance and leverage was under control. So that was a particular space where we started focusing on from October onwards.
So Parag, tell us what's the core philosophy of your stock picking framework?
Yeah.
For 2020, what's your outlook? Do you think this polarized nature of the market, which has started to normalize, will continue? What is your research telling?
So basically a core strategy, we call it Focus 4. So where we focus on corporate governance, which is a key criteria. So alignment of interest with the promoter, where a promoter also believes in creating shareholder value for minority shareholders. Second is return ratios, so above 15-18% ROE, ROC, clean cash flow generation. So we don't like companies where working capital leakage is very high. Then third is of course balance sheet, so net debt to EBITDA, which is our key parameter. So net debt to EBITDA should not be more than say 3.5x. And last is valuations. This is our Focus 4 strategy, on which we actually construct all our portfolio strategies depending upon the theme.
Sure. And what about 2020, rest of the year? We have started the year on a good note for the broader markets. Do you think this is short-lived? Do you think it will continue, some more juices left?
Sure. So basically, see, we are of the view that small caps, metals, those kind of sectors which are up till now, I would say investors were not ready to invest. Those kind of things will start doing well over next 3 to 4 years. But of course, the recent run has been very fast. So there can be some consolidation, some retracement, which is okay. But overall trend wise, we feel that over next 3 to 4 years, these are some of the things which will continue to do well.
Let's talk about your schemes and funds then. Contra fund. Tell us why the name Contra. Is it because you take Contra calls only over there? And what qualifies as Contra calls for you? Because I see the data is saying that it has, quite nicely outperformed the benchmarks. And do you find it fearful to get into places where people are heading to the hills?
Yeah, so basically, you see, Contra as a strategy is very close to our heart as a house, and it has worked very well for us. So basically, what we find is that, and how we structure Contra is that we don't necessarily buy absolutely cheap names. We actually buy quality companies at some reasonable discount to their fair values. So when a quality company becomes cheap due to some sort of problem, temporary problem, which happens in the markets or in that particular sector. So just to give you one example, when crude oil goes up, definitely you will see paint stocks correcting, you will see many auto stocks correcting, you will see some of the FMCG stocks correcting, you will see even banks correcting, because when crude goes up, there is a fear of inflation, there is a fear of rising interest rates.
Correct.
So banks also go down. So that is the time we start buying quality franchises in those sectors.
Right. Talk to us about some of the themes which have really worked very well for you over here. I think Tata Global stocks have very well. How did you choose them, and how did you arrive upon those kind of themes in this fund, which led to sharp outperformance?
So basically we cannot discuss stock specific
Sure.
things, but I would say that any good quality genuine business which undergoes a long period of consolidation or underperformance, it catches our eye. And if we see inflection point in that company, if we see some triggers, if we see that company has started to change the strategy and all results are already being visible, then we try to be first in that particular space.
Right.
So even one quarter and every parameter is moving in right direction, then we catch up to that theme.
Talking of coal, which is a metal company, Parag was also talking about some of the Contra calls. So metal is also one area where you had taken Contra calls in your Contra fund.
Yeah,
What is the thesis behind it?
So basically metal is a day-to-day need, right? You need, but because the trade war which was continuing from last 1 year, metal stocks were trading at below book values at 7-8 Ps. So it was very attractive valuation, and this time in this cycle, unlike in 2015 cycle, metal companies had a very good balance sheet. So if you see net debt to EBITDA, net debt to equity was very comfortable. So it was very easy this time, while during trade war was going on, to take a call on metals. And for example, during demonetization, it was very easy in my view to buy FMCG stocks or paint stocks. During trade war, of course, it was slightly difficult because you don't know where is the end of the tunnel.
Sure.
But because valuations were in your favor and balance sheets were good and cash flows were very robust, I think it made sense to buy metal stocks during trade war.
Talking of Contra, Telecom is also one area where your house has gone Contra and has been handsomely rewarded. Talk about that particular call, which was a very brave call at that time, but now is working out very well.
So I would attribute this to our house view 100%, and it was a great call that in an industry which is a day-to-day need again. One can live without one-time food, but without mobile, if you ask your children to switch off your mobile, he will not do that. So mobile is a day-to-day need. It was most competitively priced in India than in the world. And it was undue competition, and now the survivor has emerged so strong, as we all know.
Yes.
So I think it was a call that you bet on a healthy company in a sector which is a day-to-day need, where balance sheet is not highly leveraged, I would say, and cash flows are very robust.
Let's shift focus and talk about your pipe fund, because that is an area where you actually do much deeper stock picking in the smaller areas, valuation, corporate governance, all of this matters over there a whole lot. Talk to us about the strategy of pipe fund.
So basically in mid caps and small caps, corporate governance becomes even the most important criteria, I would say. Leverage becomes another most important criteria. Operating cash flows where working capital leakage is not there. So for example, in construction space, where you have most of the companies where debtor days are above 100. So we have companies where debtor days are less than 60. So corporate governance is top of the class. So I would say that that makes a lot of sense. For example, recently, we have seen that in agri stocks, because of very good rabi crop, because water levels were very good in rural India, we have seen very good numbers from agri companies. So we have to buy those companies where there is an inflection point, of course slightly ahead of the numbers and slightly ahead of the the curve which starts after that.
In fact, I wanted to talk to you about this agri theme. You have some specialty chemical names, you have some agrochemicals, you also have so you're actually quite tilted towards the agri theme. Last 2-3 days, fertilizer companies, agrichem is doing very well. Do you think this is a durable kind of a theme?
It appears that at least this rabi crop season, which is Q3 and Q4, these companies are likely to do very well. Of course, it's a seasonal business, so you cannot say that whether next year these things will repeat or not.
Sure. Apart from that, I also see a lot of pharma names also in a couple of your schemes, in both schemes actually. Pharma is also at a 5-6 year low. Nobody wants to touch that space. Maybe some select mid-cap pharmas are doing well. What's your thought behind that one?
So across the themes, as I told you, we focus on companies. We don't necessarily go by last 5 years how much return they have generated for shareholders. We go by genuineness of the business. Business is generating very good cash flows, very good return on capital employed. But suppose a growth is missing. But then there is an inflection point which comes, and we start seeing growth also.
Sure.
So those are the companies which we have focused in pharma also, even in pipe, where we buy small caps.
Right. Okay, so one last word before we let you go, Parag. And both your schemes, Contra as well as pipe, and as the PMS division of ICICI Mutual Fund, what's the outlook for the area where you are specialized in, mid and small? Next 2-3 years, do you think companies which are doing well on earnings and corporate, they have a runway which is ahead? Alpha can be created versus the space benchmark?
Absolutely. So basically, we clearly believe that, of course, we have run from bottom. We are up by around 15%. So there can be some retracement, some consolidation. But overall, the belief is that over next 3 to 4 years, this is the space which is going to give you higher returns. And this is a space where if you buy good quality companies and where earning traction is there, then you are going to get handsomely rewarded. So some of the stocks in our portfolios are up by 30-35% last 2 months.
Yes.
So, that is how it goes. If earning comes in a good, genuine business where promoters are good, balance sheet is debt free, or I would say less leveraged, and return ratios are good, I think there is huge liquidity which is going to chase them.
All right, Parag, we'll let you go on that one. Thanks so much for dropping by today.